And just to take a second and kind of tell you a little bit about Metastock Zenith, it is actually a tool that was built by Thomson Reuters essentially to compete with the Bloomberg terminal. And that is what all the professional traders use. It's a fundamental resource. It obviously has charting capabilities with the Ichimoku cloud and some other basic indicators, etc. It's a huge resource for traders that like to implement some fundamental trading aspects into their analysis. So Thomson Reuters put about $1 billion into creating this platform to compete with Bloomberg, and we were actually lucky enough, being owned by Thomson Reuters at one point, to actually create a retail version, a subset of what the Thomson Reuters professional traders use. And so we called that Metastock Zenith, and that is available for all of our retail users. If you're an FX trader, it is $99 a month, and going along with our Asia PAC Summit trial offers, we will offer 3 months for the price of 1 on that. Now, those of you just coming in, welcome. Metastock has been around for quite some time. We've been around for about 30 years, and what it's allowed us to do is really explore the markets from everything to stocks, futures, FX, as you just saw. We're able to handle our fundamental analysis through the Zenith platform that you just saw. And I think that's one of the reasons that we've been able to secure the Reader's Choice Award with Stocks and Commodities magazine for 25 years now. We will, what we want to do is really show you how the platform works and get into it a little bit and have you use it into your trading. And one of the best ways to do that is actually try out the software. So we are offering a trial for those of you attending the summit, and you can get that trial. I've actually put it in the chat box. You can get that trial at metastock.com/APAC Summit 3 for 1. And you will be able to just sign up with the trial from there. Now, for those of you that are in Australia, I do want to mention this again. We are coming to Sydney, Australia in July. July 16th and 17th. We'll be at the Radisson Hotel and Suites in Sydney. We're very excited to do these face-to-face events. We obviously love our Online Trader Summit. You guys have made it a huge success in the industry. We also like to do these live training sessions with other market experts. At this one in Sydney, we're actually going to have Rahul Mahindar. We're going to have Stuart McPhee. We're going to have Paul Nogin, who you probably heard earlier. Scott Brown, owner of Metastock. We're going to have Kelly Clement, who is the Director of Sales here at Metastock. Normally these in-person trainings, they go for $599, but we are doing an Asia Pacific Summit special where we're going to give you $200 off. So that the price for that is $399. So if you're looking to get set up with a Zenith trial, if you're looking to get set up with a Metastock trial, or if you want to attend this Sydney conference that we're doing and meet us face to face and partake in this training, please contact us. One way, we're actually available right now, www.metastock.com/sales chat. I have a couple of guys manning the chat forum right now. Or give us a call at +1 801 506 0900. And of course, that is our international number. Now, while introducing the next speaker, we're very, very lucky to have our next speaker. Bring up the slide here. Koon, CK, as he likes to go by. He is actually the co-founder of Asia Charts. Asia Charts is a leading education provider in stock investment in Singapore. They have, over the last 10 years, worked with thousands of retail investors as well as institutional traders. Asia Charts has been a long time, really just superb partner of ours. We love working with Asia Charts as well as you know, supplying their clients with our top of the line tools. Asia Charts currently operates in Singapore, Malaysia, and Indonesia. CK actually, he focuses in trading growth stocks and has that have basically potential for big gains and using derivative instruments like CFD options and warrants for better returns. He's been doing this for you know, 20 some odd years, and we're excited to have him speak here today. CK, I did a short introduction for you. I'd love for you to tell us a little bit more about you, and tell us a little bit more about your methodology here today. So if you want to go ahead and just unmute your mic, and I will go ahead and make you a presenter here.
All right. Can you hear me?
Yes, loud and clear.
All right. Is everything in order?
It is perfect. Yep.
Great. Now, thank you again for your nice introductions. Something about me, actually, I'm primarily a swing trader focused on price actions. I've designed a couple of those trading systems together with my previous partners. This is really to actually help retail investors to make sense of the markets. The market itself is quite confusing to most people, especially if you follow the news too closely. So we try to actually make things simple, kind of shorten their learning curves, and more importantly, hope that they can actually get very good results from the markets. Now, we actually provide a suite of supports to make sure that whatever we teach help them to internalize the learning, and more importantly, able to actually benefit from our program. All right. Just before I comment, I'd like to actually just do a very simple survey. What do you actually trades actually? Perhaps you can just type in there so I can take a look. All right. What kind of traders are you? A scalper, day trader, swing trader, position trader? How long have you been trading? Just started? 1 to 5, 6 to 9, 10 years? All right, just let me share a little bit about the company so you're familiar with us. Founder was 2006, 10 years ago. We are one of the leading financial educators in Singapore. We present Singapore, Malaysia, Indonesia as well, as mentioned by Hunter earlier. Who are we exactly? We are just private traders with a passion for the markets. We focus more on technical sides of the markets. Doesn't mean that fundamental doesn't work, it's just that it doesn't work for us. I started with as a value investors, and after a while you find that actually technical make more sense to me. What do we do exactly? We educate retail investors, make it easy. As I mentioned earlier, trading itself can be quite confusing to many people, irregardless of your academic qualifications. So you try to actually make it as easy as possible. These are our products. We have created proprietary strategies, trading systems for stock and forex markets, both for active investing as well as passive investing. Now, this is my presentation outlined. I will do a quick review of the market actions, a quick overview, and I will discuss the 3 modes of market actions and the common strategies that are used. How to take advantage of transition mode. This is something a lot of people do not discuss, and what is hungry money and why hungry money. I will also be introducing an adaptive band trading system. This is a very unique trading system which actually filter out period of low volatility, detect sudden surge in price, and how to manage trades effectively. Now, one of the greatest challenges faced by most retail investors is hang on to a winning trade. They tend to actually sell too early. And not only this system itself has a built-in risk control to make sure that a loss is actually limited, but your gains is substantially much bigger. So this is the outline for today's presentations. Now, we have a very basic philosophy. We like to make things as simple as possible, so I try to use simple terms, but we don't want to actually lose the essence of it. Now, first, let me give you an overview of market actions. Now, most people actually miss the obvious on the basics. Market itself basically comprises of buyers and sellers. Buyer or products, sorry, buyer and sellers of shares and not product and services. Most people think they are the same. They are not the same. When we go to stock market, we actually buy shares, we sell shares, and therefore we're interested in the actual demand supply of shares. Price is determined by the supply and demand, and it is the imbalance between the demand supply that causes the price to move. Perception is reality. Now, we are not interested in the absolute truth of the markets. We are interested in what is people believe to be true, and more importantly, they act upon it. I'll give you a very simple example. There is a stock in Singapore called Brumont. In 2013, the stock went up 20,000%. Now, why is it that the stock moved up? It moved up because people perceive there's value in the stocks and they buy. Likewise, there's a stock called Heartland's Payment Systems. In 2009, they've been running up. Until now, it went up 24. Why the stock moved up? Because people perceive there's value. Market reflect the behavior of the masses. And crowd psychology is real and price reflect everything. Now, I'm not too sure whether you know that we do not really trade the market. We trade the feeling we have about our markets. And it's all driven by psychological and emotional factors. Market is primarily psychology in nature, and these are our main emotions: greed, optimism, that cause the price to move up; fear, cause the price to come down; and uncertainty, which is indifferent, cause the stocks to actually move sideways. Now, primary markets actually work this way, irregardless of the financial markets that's involved. Now, markets can be classified in one of the three modes of actions. You have the trending modes, you have the ranging, and you have this thing 99% of the time. So market is either working or resting 99% of the time. One of these two modes. Now there's a third mode called the transition modes. 1% of the time it transits from one mode to another mode. Trending to ranging, ranging to trending, and this is where we have breakout and reversal. Now in this presentation I'll focus more on the breakout. Now in trading market itself, price make net advance and decline over time. All right, we have uptrends, downtrend. I think most people are familiar with that. This is an uptrend. This is a downtrend. Now sometimes market take a rest, it actually goes sideways. Range bound, oscillate between demand, support, resistance, trade sideways. These are the terms people use: listless, choppy, small price range, low volume, and very important, it actually form pattern. Now these are the characteristics of the markets when they actually move sideways, and it's very important for you to actually appreciate and understand. For example, this particular stock, you can see over here, the stock actually trades sideways, volume is low, resistance, support, it's very clearly it's forming a rectangle patterns. So market actually moves sideways, actually form pattern. This is something a lot of people may not appreciate. We perhaps know the patterns, but we do not know that actually when markets actually moving sideways, a lot of patterns actually form. Now here again, we have another stocks. You can see the very low volume over here, and very defined support resistance. And here we have a triangle patterns. Over here we have a flag patterns, and obviously this is the pole. Here we have cup with handle patterns, and here we have a saucer patterns, inverted head and shoulders, pattern above pattern, in this case a double cup with handles, and here we have triple saucer pattern. So when market actually moves sideways, you actually form patterns. The third mode transition, this is where we have breakout. Over here we have a stock that we consolidated for quite some time. This is ranging and that's trading, and this is a transition. This is where we have breakout. Now a lot of people may have heard of breakout before, but they didn't know actually this is a transition between ranging and trading markets. Ranging, trending, and we have breakout. Ranging, trending, and we have breakout. Likewise here, ranging market, trading markets, and here we have breakout. Triangle consolidation patterns here, this is the ranging markets, and here we have the breakout. Just put everything in the schematic diagrams for easy understandings. Over here we have ranging markets, and over here we have the breakout. Now somewhere over here, when a trend is established, we have a trending markets. Now, I'd like to actually take a few minutes to actually discuss about trending markets and what people normally do. Now, in trending markets, we can use lagging indicators like moving average, direction movement index, MACDs, trend lines, channel. We can use simple strategies like moving average crossover, Congestion Box method. These are common strategy people use to trade trend. Turtle trading system, I think it's a very popular trading methodology. Dungeon channel. So these are the techniques people use for trading markets. But trading markets itself or trend following techniques, there are limitations. Number one, it really only when a trend has been established. It's difficult to identify the early stage of the trends. So using a trend following techniques, you tend to actually get into the markets slower, missing the early part of the move, slower in reacting when the market changes. Now, especially when the stocks do a parabolic move, accelerated move, it tends to actually move down very quickly. And if you use a trend following techniques, you tend to actually return substantial amounts of profit when the trend eventually comes to an end. Suffer whipsaw during non-trending markets. Now, the markets actually go sideways. The trend following techniques suffer a lot of losses. Next, I'll discuss the ranging markets. What are the common strategy people use? Trend fading methods, swing trade, support resistance trade. They use oscillators like stochastic RSIs to find overbought and oversold trigger, or they can stay aside. For example, over here, we buy supports, sell resistance, buy support, vice versa. Take a look at the example of the stocks here. Now over here, we have a trigger buy at a support, sell at resistance. Again, buy at support, sell resistance, buy support, sell resistance. We can use an oscillator, in this case stochastic oscillators, to look for oversold conditions. Here we have a trigger buy, overbought condition with sell, buy, sell, buy, sell, buy, sell. Now, oscillator is very good for sideways markets, and generally you can be profitable. But there are limitations to trend fading techniques. It means major move of the markets. For example, here you actually buy support and you sell resistance. And if the stock were to actually break out and move, you will actually miss this move. Sell resistance, buy supports, and you miss the major move. So trend fading techniques has this tendency of missing a major move on the markets. For example, here you could have actually cover your position here and actually moved out, you miss the move. Suffer severe losses during breakout from ranging markets. Here you short and you cover, here you short, you cover, here you short, and if you're not careful, you suffer severe losses. Miss major move of the markets, suffer severe losses, generally small gain and small losses. Now for trend fading methods, you tend to actually have small gains, small losses, all right, and less profitable than trend following technique. Now I'm not too sure whether you're aware or not. Most of the technical analysis actually focus on trend. Take a look at some of these classic books. Perfect speculators must know when to get in, and more importantly, must know when to stay out of a sideways markets. Now these are all classic books. In the narrow markets, when prices are not getting anywhere, there's no sense trying to anticipate what's the next big move is going to be. Reminiscence of a stock operator. Again, this is another classic book. Jesse Livermore's, most traders will know him. There's a plain fool who does the wrong thing at all time anywhere, but there's a worship fool who thinks that he must trade all the time. Again, you try to discourage people to trade when the market is just going nowhere, sideways in particular. W.T. Gann, trade moving markets and avoid down sideways markets. Now let's hear what the wizard have to say. These are the top traders in the world. We call it the market wizard. They do two things very well. First, master the art of cutting losses. Number two, master the art of not trading. Now this is a challenge to most retail investors because most of them tend to actually overtrade. But you got to master these two very well. But we have a problem. Markets do not trade all the time. So you focus on the trending market itself, then most of the time you're out of the market. Now we have a second problem. In fact, most of the time market is actually ranging. 70 to 85% of the time market is actually trading sideways. About 15 to 30% of the markets, 15 to 30% of the time market is actually trending. Now trend traders has some issues to deal with. Non-trending markets can be very damaging to trend traders. Trend traders need to develop the abilities to identify non-trending market quickly and avoid trading losses to preserve the capitals. Identify and take advantage of non-trending markets. Now, what you can do is identify and bracket the consolidations with support resistance to catch the breakout. Use shorter time frames to actually scalp for profits. Or you can use option strategy like straddle, butterfly, condor. Right? These are ideal when markets are not going anywhere. But to us, there's a better way. The focus is right here, which we call the hungry money. Right? Now remember, trend only commences from here, but there's this portion here most people tend to actually miss out, and we call them the hungry money. Now why hungry money? Because sudden shift in price during a breakout is most aggressive. And this aggressive move tends to capture attention that fewer more traders to enter the markets and cause the price to move even higher. Now what happens was if you miss this move, very often by the time you pull back, you'll be too late. And many of these moves itself doesn't have meaningful pullback. Let me give you a very simple example here. Now over here we have a stock that actually consolidated for quite some time, and very obvious here there's a breakout. And notice the stock run for 20 bars without meaningful pullback at all. Now if you were to miss this move itself, you notice by the time you have a proper pullback where you try to set up, this entire move would have missed already. This is another stocks. After the breakdown, you notice the stocks did not have meaningful throwback. It just moved sideways briefly, but there's no meaningful corrections. Rapid moves go quickly into consolidations after prior breakout. Take a look at these stocks again. After the break itself, there was an aggressive run, and by the time you identify a proper place to do a setups, you will notice that actually the stock began to trade sideways for easily 3 weeks. And likewise for here, you notice after that you do a reversal and fail. So you miss all this opportunity. Another examples, look at a strong move over here and followed by a pullback. Again, by the time you pull back, you notice you miss a substantial move and you rest for easily 2 weeks. Likewise for here, if you notice after the pullback, you actually reverse. So there are no more opportunity to actually enter in this position. Now, what is hungry money? Now, hungry money is actually pure momentum-driven play. A short-term trading techniques, a traditional rule does not apply here. So this is something unique about this. Now, first thing first, how can you tell that the market is actually ranging or trending? This is something which a lot of people have difficulty trying to define. In fact, as I mentioned earlier, most of the books actually discuss about trend analysis. But how to define that become quite difficult, especially for ranging markets. Most material do not discuss that. So we need an effective way of defining congestion sideways or ranging markets. Now I'd like to give you an overview what some materials have discussed, and so that you have better understandings what has been actually done so far in trying to define sideways markets. You have things called the latches. This exists within a trend. Consists of no more than 10 bars. You have 2 matching high and matching low. Alright, in this case here you have 2 matching high and 2 matching lows. No more than 10 bars. And you probably came across the terms called congestions. We have wider ranging markets, very choppy, higher volatility, tend to be more erratic. Support resistance levels are more difficult to define, about 11 to 20 bars. Trading ranges, this is something you probably heard before, market going to a trading range. An area where the overlapping bars outnumbers the non-overlapping bar. Usually about 21 bars or more, something like this. So there are a couple of ways people are actually trying to define a sideways markets using these terminologies. Then you have consolidations. narrow sideways markets, very firm support resistance level, low volume required. Now this is something that a lot of people may not appreciate. When the market is going to a consolidations, it tends to be very orderly and increasing unstable with time. The longer it is, the more unstable it becomes. This is something, if you understand, it can help you to actually appreciate how to actually catch breakout. Take a look at these stocks. It's a Chinese stock listed in Singapore. After a period of consolidations, you notice over here, all right, it become quite unstable and the price range become quite small. And eventual collapse happened after that. This is another stocks here. Again, you notice a very tight consolidations, very low volumes. And over here, the price range become extremely small. Now, the longer it consolidates, the greater the instability becomes, and when it really breaks out, it can be very extremely violent. Now, I'd like to actually revisit this thing called the congestions and how we actually eventually make it simple. Now, congestion area, we tell areas where there's overlapping bars outnumber non-overlapping bars, and extended period where the price move in small ranges, horizontal corridors that contain the price fluctuations for extended period, and there is this test of top and test of bottoms, right, in the congestion area. Now, how do I divide test of bottoms? Now, test of bottom is present when the range of the lowest price is currently downswing, is traded within the entire range of the previous bottom. Now, I'll show you some example later on. Test of top is present when the range of the highest price in the current upswing is traded within the entire range of the previous top. Now, let's take a look at this particular stocks here. After a strong downward move, we found our temporary bottoms here, and there was an upward swing here. Now, the next downward swing itself will attempt to actually test the bottoms, but it's confined within this particular range. Okay, and likewise, we have a test of this top, but confined within the previous top, and so forth. Now, sideways markets has this behavior. They also have this particular behavior. All right, the distance between the high of pivot low and low of pivot high is relatively small. In some cases, they are overlapping. For example, take a look at these stocks here. Now, this is a pivot high. This is a low of pivot high. Now, this is a pivot low. This is high of pivot low. Now, let me plot the next one here. This is a low of pivot high, high of pivot low. If you notice, it tends to actually overlap. All right, it tends to overlap. This is what happens in the sideways markets. Another example here. This is low of pivot high, high of pivot low. So in the sideways markets, you have this behavior as compared to the trending markets, where it tends to be out of range. Now, because of these unique characteristics, we can actually simplify the process of identifying congestion areas. First, we identify a range marker of at least 10 bar. Draw line top and bottom of the congestion areas. Place our long trades above the upper congestions. Place the short trades below the lower congestions. And then adjust according to the price actions within the congestion area. Now, the last part is actually difficult, right? And this is a challenge that we actually face. So, finding your congestion areas only require these 5 steps. If you can do that effectively, then you are able to actually bracket the congestion area quite effectively. Now, how do we actually bracket the congestion area? And more importantly, how to effectively bracket it? We actually design some things, we call it the congestion box indicators, based on those 5 rules which I mentioned earlier. I call it the box of awesome. Number 1 is a support resistance level identifier. It box the congestion areas effectively. It filter to minimize whipsaw, and this is something very crucial. Adaptive to change in prior short-term high and low. Again, I mentioned before, this is a difficult part, and if you can do it effectively, you will have a wonderful product, like what we have here in the congestion box indicator. Now, just to put it in the pictorial form so it's easy to understand. Now, over here we have a training markets, and this is the congestion areas. Now, we'd like to actually put this inside a box. That's our whole concept. Now, obviously here is trending again, and this is the congestion areas, and we actually like to actually put this in the box. Here we have again trend, and this is the congestion areas. Again, we like to actually box it up. In this case here, we have downtrend. This is a congestion areas again. We'd like to actually put it in the box. So those areas that we do not like, in this case congestion area, we actually put it in the box, exposing those areas that are tradable. So as long as we can effectively box up this area, you notice you expose those areas that are more tradable. Take a look at the stocks here. Okay, now on high sides, everybody can see the congestion areas. Let me just put in the box here. It's pretty obvious. All right. Now with the congestion box indicators, it actually automatically plot the congestion areas for you. All right, as the market progresses. So very obvious here. This is the congestion box indicators, and these are the areas that actually box it up, exposing those areas that are tradable. Okay, likewise for this particular stocks here, again this is the congestion box indicators and effectively box up the congestion area. Likewise for downtrend, very obvious, these are the congestion areas. Alright, we have one here, this one is pretty obvious, and likewise here. If you notice, if you can actually box it up effectively, you expose the tradable area. Now with the congestion box indicator, we can do that effectively. Alright, so you can see over here, congestion box indicators. Alright, and it actually boxes it as the market progresses. Again, exposing the tradable area. So we actually want to avoid being stuck in a congestion area. And this indicator effectively helps you to actually identify the congestion areas, okay, and allow you to focus on the area that is actually outside the congestion areas, which is more likely to be profitable. Now, boxing up the congestion areas itself helps us to actually know when to trade. More importantly, it also helps us to know when not to trade. Now, if you know when to trade, then you cut down your non-profitable trade. Now, as a trader itself, we only have two objectives: find winning trade and stay away losing trade. Find winning trade and stay away losing trade. Now, if you can do that effectively, our focus will be very simple. The whole idea is actually to trade outside the box. I call it trade out of the box. All right. Whatever that we do not like, we put them in the box. We only like those things that is outside the box. Now, how then do we trade outside the box? We use an indicator called the dynamic band, which we created. Now, what is this dynamic band indicators? Now, it's an adaptive band sensitive to price movement. It responds to market volatility. And that's important because in the sideways market itself, volatility tends to actually collapse. Used for generating signal. So three key features of dynamic band. Let me just introduce it. Now, dynamic band itself comprises of two components. You have the dynamic line single line. You have the dynamic band twin line. Now, dynamic lines indicate area of low volatility, and this is where we call the congestion areas. Now, dynamic band indicate area of high volatility, and that is where we have price expansion. So this band itself actually effectively can help you to identify areas where to trade. Now obviously in our case here, we're interested in the area where there's price expansion, okay? And we avoid the congestion areas. Now put this in the charts. This is the congestion box, the blue lines. This is the dynamic band. And if you notice over here, the dynamic bands, we have single line, we have double lines. Now in the next time, I'm going to remove the box so that we can be focused, easily focused on the dynamic band indicators. Now this is a single line here, the dynamic line, we call it dynamic line. This is area of low volatility. And this is dynamic band, area of high volatility. Now obviously, we're interested only here. Now if you think about it, it's like separating the low road and the high road on the chart. Now obviously we avoid the low roads and we only focus on the high road. And this is where you have volatility and this is where the range expands. Likewise, for the downtrend stocks, so congestion box indicators, dynamic band. Again, the next time I'm going to remove the box so that you can focus on the band. Now I have grayed out the bar as well. You notice this is dynamic line, right? This is dynamic band. This is area of low volatility, and this is area of high volatility. And this is the area that we are interested in. So if you can effectively actually box up the congestion areas and using the dynamic band indicators, it helps to actually effectively trace the strong move coming out of a congestion area. Not only this, dynamic band also helps to generate training signal. All right, we have we look for price crossover and direction of the slope. Let me give you some simple example. Now these are charts here. All right. Next, I'm going to plot the indicators. In this case, this is the congestion box, and this is the dynamic band indicators. Now, price cross, we're interested when the price cross above the band, above the box. Now, remember, above the box means it's outside the congestion areas. Above the bands give us the trigger. Now, this can be likened as a flexible trend line. Okay. Here we have another triggers outside the box, outside the band. Now, if you notice, there were actually two instances where the price actually break the box. Now, this is what we call the whipsaw. Now, we will not trade this for the basic reason because this happens above the dynamic line. And line indicate area of low volatility. And we just want to avoid that. Another example. Now over here we have a trigger, the bar trade outside the box, outside the band. Alright. Now for those people who are familiar with chart pattern, if you notice that over here itself we have a triangle consolidation patterns. Now we design these systems for people who may not be familiar with such things. Right? Now people who are busy perhaps to actually put in a lot of efforts to actually understand the language of the markets. We design this to actually help to actually solve these problems. So regardless whether it's a triangle consolidation or rectangles, the congestion box indicator helps to actually box it up effectively. Again, here we have a whipsaw, and we will not take these trades because it happens above the dynamic line. Now for longs, we have 5 exit strategies to help you. Now you can use this according to the style of tradings and your risk appetites. The first thing I'm getting out of a stock that actually was running on a band. First is to get out when it closed below the lower band. Take a look at this particular example here. Now here we have a triggers. Have you noticed the stock has been running on the bands quite nicely, or for 20 bar or so? And over here, it's pretty obvious. The stocks actually start to actually go into the band, and over here you actually trade below the band, and this is where you get up. Alright, this is the first exit strategy. Now remember, we can liken this to a flexible trend line, and certainly we do not like to trade below the trend line. So this is one way of getting up. Now, this is another example. Again, you ride very nicely on the band, and over here, it actually trades below the lower band. Alright, and this is where we actually get up. Now, second way of getting out is when the stocks become very quiet and re-enter the congestion box. Now, after a period of run itself, sometimes the stocks volatility will actually drop off and actually go into the sideways markets, and here you can actually get out. Take a look at these stocks here. Now, over here we have a triggers, trade above the box, above the bands, and it was running the bands. And over here, if you notice, it re-enters the congestion box. Now, when you re-enter the congestion box, this is where we actually get up. Now, there's no point trying to actually waste times holding a stock that is going sideways. All right, and especially when the volatility has actually dropped, there's no more price advance. Now, the third way of getting out using the systems is when you violate the lower band. Now, this is useful for people who have a bigger risk appetite, all right, or perhaps they wanted a second confirmations before they get out of the trades. And this is also useful for people who have actually entered trades much earlier and has enjoyed substantial profits and are prepared to take more risk. Now, what is violation of lower bands? Now, a violation is defined as a close below the lower band, followed by a move the next day below the low of the bar 1. Alright, so basically we require 2 bars, and the second bar making a low compared to the previous bar. Take a look at these stocks here. Now over here we have a trigger buy. This particular bar here closed below the band. We're looking for a confirmation, and the next day this is what happened. It made another low. This is what we call the violations of the lower band. And this is again mentioned ideal for people who are prepared to take more risk, or perhaps they enter it correctly and they're generating substantial profits, and you don't want to actually get out too prematurely, so you want a confirmation. Alright, so this is called violation of the lower band. Now here we have a triggers. That's for Galaxy, a stock listed in Hong Kong. And here we close below the lower band, and the next day you actually make another low. This is violation of the lower band. Alright. Now we also can get our extension bar. Now I mentioned earlier I'm a price action trader, but I designed this for retail investors who may not be so much into learning how to trade, because I don't reckon everybody's that passionate about trading, but they certainly wanted to make good returns from the markets. So this system is designed for people who are busy and but still would like to actually get good returns from the markets. Now over here we have a triggers. Now what do you mean by extension bar? Now extension bar itself is basically a bar that is much longer over the last couple of bars. This is what we call extension bar, and sometimes it's called exhaustion bar. Now this is something which many of the retail investors may not be aware when they first started up. They always think that it's a long bar and they are very excited about it, and they just trade. Now extension bar itself is actually an exhaustion bar, especially if it's a company with extremely high volume. Now you get out on the next open. Alright, because the move is likely to be ending. So this is another way of getting out. Now again, I mentioned I trade price actions, so these are the things, if you happen to know, it's very useful. But for this particular system itself, we actually encourage people to actually take partial profit at least when you see a very long bar like this. Now this is another stocks listed in Hong Kong. Here we have a triggers. Have you noticed running the band very nicely? And obviously here we have an extension bar. We get out on next open. Okay. Now when a stock trade a wide range reversal bar, it's also a good time to get up. Let me show you some example. This is Ideal Sun City, a stock listed in Malaysia. Very strong move over here. We notice you trade outside the band, right? This bar here outside the band is extremely strong. And obviously for those people again familiar with reading charts, here we have a gap, in this case a runaway gap, and it was actually covered. This is an exhaustion gap. Now obviously here you have a wide range reversal bar, and it's time to actually get up. So this is another way of getting up. Show you another example. Here we have a triggers, and over here, if you notice actually you trade below the band. Now it's important not to trade below the band. There's something you will not take note of. Now here you could have gotten out already. So remember, dynamic bands here, you can liken it as a flexible trend line, and certainly we don't like to trade when it actually broke the trend line. And here, it make a new high again, we can actually re-enter the positions. Okay, and over here you will notice that there's a reversal bar here. In fact, this is a wide range reversal bar here, quite a bearish sign, and you get up. There's another stocks listed in Hong Kong. Here we have a trigger buy. We have a wide range reversal bar here, right? As it on the close. Now same for shorts. This is here where you have a trigger. The first way of getting down is where you re-enter the congestion area. Notice the volatility actually collapse here. You can also get up when you trade above the upper band. Again, remember this can be likened as a flexible trend line, and certainly we do not like our positions to be above the trend line when we have a short position. So this is time to actually get up. Same stocks, again, you can get out using the extension bar exit strategy. Here we have extension bar and we exit on the next open. Same stocks, here we have a wide range reversal bar. Okay, in this case it's a bull up bar, so we actually can get up here. Next way of getting out, violations. Now remember, violations stock actually closed above the upper band, and we need another confirmation. The next day, you actually make a new high. So this is called violations of the upper band. And here is where you get up. Again, mentions for people who are prepared to take more risk or wanted further confirmations. Now, very important thing, we design a system such that actually when this band were to turn up, you can never have a short position. Vice versa, if you are long, you cannot have the band turning down and you're still having a long position. So the system is quite robust even for people who have very little knowledge about trading. So we design such that actually it is useful for people who are busy but may not have the time to learn about the markets and about trading, not prepared to commit more time. So this is designed for them. All right. Now, even for professional traders, many of our clients, professional traders, find it extremely useful. They could have different techniques of trading, but they use this band to actually guide the action so that they don't sell too early. Now, I'd like to actually do a quick demo. All right. Now, to save some time, I've actually done the scan earlier. We have actually two scans here, the breakout and start the run. Let me just show you breakout. This is what happens yesterday. Sorry about that. Trying to actually get the reports up.
Try right-clicking on it.
Yeah, it doesn't seem to hang. So sorry about that. Let me try. Hunter, are we able to hold it for a while? I mean, try to relaunch it.
Sure. Yeah, just restart it.
Let me just close this thing off. It was working fine earlier. Is it off air right now? Okay, are we okay now?
Yep, looks fine. Yeah, looks fine.
Okay, great. Okay, so this is what happened yesterday itself, and this is how the expiration report looked like. So you have a buy and sell column here. For example, let's take a lot of stocks here, JC Penny, all right? All right. Let me just plot the indicator. It's obvious over here that we have actually break yesterday, so very high volume. This is a trigger yesterday. Now, what active trader will do, they will take the trades here by shorting it. Now, for the conservative traders, this is what they will do. They wait for the next bar. Now, when the next bar make another low, all right, they go shorts. Now, the stop loss is actually placed at the breakout bar. Okay, and then use the strategy which I covered earlier to manage your trade. Now, let's take a look. For example, over here, you said we have a trigger. The active traders will probably take these trades. Now, the end of day traders or the conservative trader will wait for the next bar. Obviously, you miss it because there's a gap. the notice actually was very strong. How can you tell? Because the bars are all trading above the band. And this is what we call daylights, the gaps we call it daylights. You notice the daylights are pretty big. And it actually tells you the characteristics of this move is changing. How can you tell? You can actually see that actually the gaps is narrowing down. Okay, and you notice it start to actually move inwards. It's a clear sign that actually it's losing momentum, so you can take defensive measure. What you could do is that you take partial profits. And you notice over here, you actually break the lower band, and this is where you get up. Okay, so you notice actually you hang on to the stocks. Now, one of the greatest challenges, as mentioned earlier, is that people tend to sell too soon, and handing to a winning trade is a challenge which most people find. Right now, over here itself, you have another one, small profits. Right, here we have a bit of whipsaw over here. Here we have a break as well. Again, we have some profit over here. Now, I'd like to actually show you what I call stock in the run. Whatever happens the day before, previous week, are all shown over here. And we notice over this column here, we have actually day run. Now, what does day run refer to? Day run refer to the day when actually the stock break up. All right, it'll be running for 68 days. All right, so we can take a look, for example, a stock like this. Gold recently, there's some run. Let's take a look. These two stock. This is King Ross Gold. All right, again with a band. This is what happens. The stock has been actually moving up. Now, you notice over here itself, we have a exhaustion gap. It was covered. Again, if you're familiar with this concept, you can actually get up there. Now, if not, if you notice over here, this bar itself closed below the lower band, and this is time to get up. If you notice, actually, the stock is still shown in the reports because they have not gone into the congestion area. So this is why it's reflected here. Now, obviously, if we move downwards, all right, even if you are not what do you call that, a very passive investor or traders, you will know the basic concept. You can never trade below a downward pointing trend line, so you should actually get out of this position with still good profit. But obviously, use one of 5 strategies that we have covered. This is a very obvious one. Now over here, again, you notice this is a wide range reversal bar here, and you shouldn't hold. So this system is quite robust in the sense that it'll tell you when you should get out. Now obviously, if you can get out effectively, you lock in maximum profit. If you look over here, you have another break here, and you notice it trade very nicely. We have a gap here. There's a pullback, and still managed to actually trade above the 2 band. And over here, it's time to get up. So you notice, you're happy to actually manage the trade quite effectively. This is Silver Corp. All right. Again, if you notice, we have a very nice move. This is something I'd like to actually share with you. You can see that it's actually this, the stock actually moved below the moving average, sorry, moved below the dynamic band, and this is where you should actually get up. Over here, we re-enter, all right? So this is a second trade, and it moved up quite nicely. Now over here itself, you can see it actually closed below the band, and this is where you should get up. Now, even if you're totally ignorant about trading systems, you cannot go below a downward pointing band. So you notice even if you were to get out here, or a reversal bar here, or even here, your profit is still quite substantial. All right? So we designed a system such that it's robust enough for you to actually handle it well. All right. Now, we wanted to take a look at some of the other stocks here. Again, always make sure you trade stocks that is liquids. I think that's important. This is a GRT Panther. All right, over here, let's take a look at this particular trade. We have a very nice trigger, and here you bottom gather up, re-enter over here, small profit. Here, likewise, you have small profit here. Now your re-entry is over here. We have a gap up. There was a test of this gap, and it bounced off. You can see a series of things. Again, if you recognize this, it's good. But even if you don't, you can be a profitable trader with basic understanding. Now, there's a series of runaway gaps. If you notice, the last gap was covered. This become an exhaustion gap. And it's good to get out. Now, even if you don't, you can recognize this is a wide range reversal bar. Now, even if you don't, it closed below the lower band. It's time to actually get out. So there are so many ways to actually tell you to get off this position. Okay. Over here, if you notice here, we have a bit off, but it's minimized. Okay. Now, if you're conservative traders, you trade the next bar, and it was not triggered. All right. Likewise for this. All right. It was not triggered. Now, later I will cover a little bit about the volumes in the next slide. It's important when the stock actually breakouts, when they move upwards, volume should pick up, because this is the characteristic of a trending markets. Now, at this point in time, we do not know about trends. Trend was only established later on. All right, but this portion here is what we call the hungry money. It helps us to actually capture the early part of a trend. All right, and trend only come in after, commence only after that. All right, so this is something which we find very useful for people to actually manage a position like this, and more importantly, to hang on to a winning trade. Okay. All right. I also like to actually mention that actually it's important to trade the higher time frame in mind. Our trade should be aligned with the bigger pictures. Now, obviously, if let's say we take a long position, we want to know that actually market is actually moving up in general, and the long-term trend is up. Now, sometimes, of course, we do trade the opposite, but if the market's direction is just opposite, you have to be mindful that perhaps you should lock in partial profit quickly and have tighter stop loss, or watch it more closely. All right, so it's important to have this higher time frame in mind. Strong move must be accompanied with good volume. Now, price is the effect, volume is the cost. So it's important to have price move accompanied with good volume. If the stock move with low volume, that's a bluff. So we must appreciate and understand that volume represents a commitment. If there's any upward move or downward move, it's important to have good volume. Trade liquid stocks. Now, this is something self-explanatory. Now, we would like to actually buy and sell easily and not suffer slippage. So it's important when you're spoiled for choice, always trade the more liquid stocks and always trade a neater chart pattern, a neater charts. Be mindful of immediate overhead resistance support. Now, the congestion box itself identified all these support and resistance level very easily for you. So again, for the uninitiated, this is very useful. All right, so you actually effectively identify those support resistance area for you. Risk management. Now, even you have the best trading system in the world, it's important to have sound risk management strategy in place. Now, this is something that we cannot overemphasize. It's important to have proper rules. You must know your risk tolerance and make sure you do not overtrade. Now, having said this, actually the system that we designed has a built-in risk control. What do I mean by that? Now, our trades are actually limited to overlapping bar risks, but you enjoy runaway bar gain. Now, what do I mean by this? Take a look at these stocks here. Here we have a triggers. You notice your stop loss will be placed one tick below the breakout bar, and your risk is confined to overlapping bar risk. But when you have a gain, you enjoy runaway bar gain. All right, so this is the advantage of the system. All right, you have a built-in risk control. Again, you notice overlapping bar risk, and here you enjoy runaway bar gain. So this is something which I find extremely useful. Now, ultimately, end of this, a good trading system must allow you to have bigger profit and smaller losses, and this itself is built in. Another example here, these are all the triggers, overlapping bar risk, but you enjoy runaway bar gain. Okay, likewise here. Okay. Now, all these things is available in this add-ons. All right. It comprises of two indicators, congestion box indicator and dynamic bands, two expirations, breakouts, start on the run. We have a template that designed for you so you can employ it very easily with expert advisor, which gray out the area that is in the congestion areas and ribbons there to tell you that the areas you should avoid trading. Right now, these are available for subscription, $16 Sing dollar a year. All right, and for this event itself, we have an exclusive bonus for you. You enjoy another 3 extra months for free. All right, so $600 for 15 months. Effectively, US dollars for $30 a month. All right, this is one of the best-selling Metastock add-ons that we have. Now, this is available at this link here. All right, you can log into this link to actually subscribe. It will bring you to this page here. Okay, and it's really exclusive for this event here, the APAC online summit, 3 extra months for free. So effectively, you've got 15 months. Okay. Nowadays, to actually help to appreciate how to use it, effectively, we have half-day workshops. We teach you the unique dynamic band strategy, how to get timely entries, and 5 exit strategies. We go into details how to actually re-enter positions, how to effectively identify support resistance level, how to manage your trades for maximum profits. Now, again, this is something a lot of people tend to take quick profit. This system helps you to actually ride for bigger profit. Increase profit while minimizing risk. I mentioned earlier, we have built-in risk control. So this is to ensure that your profits is always much bigger than your loss. And we are going to give you a guidebook as well. If you're not able to attend, we'll send you the video. All right. So again, just to recap, this is the link where you get the special promotions. And if you wish to reach us, these are our contact details. Okay. Now, before I end, I just take a list from this article here, Reminiscence of Stock Operators. Now, when you learn what not to do in order not to lose, you begin to learn what to do in order to win. Now, you think about this. Just reflect about these statements. Learn what not to do in order not to lose, only you begin to learn what to do in order to win. Now, whatever that is stated here, if you notice, it's quite similar to our philosophy. What not to do inside the box, what to do outside the box. And it's important when you design a training system, it has to be very sound. All right? And this is something which I'm quite proud of because it helps you to actually manage the trade effectively, identify very good entry, and make sure you're on the right side of the markets. Okay, and this is something which I'm pretty happy about, and many of our clients are extremely happy using this training system. All right, I'm not too sure whether there's any questions that I can answer.
And CK, does it work with FX?
Yes, you can apply it on FX on a shorter time frame as well. So far, whatever I've shown is actually daily charts, but we have used it on intraday charts. You can actually apply it on FX. Now, one thing good about technical analysis is that it's portable, and you can actually use it in other markets as well.
Okay, wonderful. And how long is that offer valid for?
This offer is valid for this month and for people who participated in this event.
Okay, wonderful. I just wanted to read off a couple of questions that we were coming across there. Well, CK, thank you very much for the wonderful presentation. Like I said, we've been working with CK for a very long time, so it's a real pleasure to have him here speaking at the summit. Please go to his website if you have any questions. Take him up on that wonderful offer as far as the Metastock add-on. Again, thank you very much, CK.
Yeah, thank you so much. Thank you, and all the best to your training.
Now, one of the things that I really wanted to focus on through our speakers is establishing a workflow, and I think that all of our speakers this afternoon have really done it. So I'm going to be educating you guys on getting into a workflow with Metastock, but also using some of the newer tools in Metastock that I think are, in all honesty, a little bit underrated. First off, for those of you that are attending now, people that have been using Metastock for years, people that are brand new to Metastock, we have been able to put together a software system over the years that has worked very well. In fact, well enough to get the Reader's Choice Award in Stocks and Commodities magazine for the last 25 straight years. Our Metastock Pro program, the real-time program, has won over the course of the last 11 years. So if you are new to Metastock, or if you're using an older version of Metastock but you want to try out the newest version, version 14, please take us up on this trial offer. What we're going to do is we're going to offer you 3 months of Metastock and data for the price of one. And kind of the motivation behind us giving this extended trial is we want to have, first off, we want to have the ability to answer questions, walk you through, train you on Metastock, etc. But you need to get into a workflow with Metastock. You need to be able to understand how the software works and how it might work for you as far as a trader, so that you can take these different systems that some from the speakers that we have this evening, our other experts that we work with, and start integrating that within Metastock and your trading style to see if it's a good fit for you. So if you do want to take advantage of that extended trial, metastock.com/APAC-Summit341. Now, we also are going to be coming to Sydney, Australia. For those of you in Sydney or close to Sydney, we're going to be actually having a live face-to-face event. We love doing those. We do them all over the world. This time around, we're actually bringing Mr. Rahul Mahindar, Stuart McPhee, Paul Nogin, who spoke here earlier, the owner of Metastock, Scott Brown, and Kelly Clement, the Director of Sales, to educate you on Metastock, and we want these other experts speaking to work with you face-to-face and really walk you through the finer points of their methodology, things that you couldn't really get out of it just by looking into our expert advisor or reading books or watching webinars, etc. So to spend a little face-to-face time, with some of the top in the industry. Now, normally these conferences will go for $599. For attending the summit, you will actually get a $200 discount, so $399 for that summit. Now, for any of the offers that you've seen this evening, and take advantage of a Metastock trial to try out Metastock Zenith, or if you want to come meet us in Sydney, feel free to come into our sales chat, which is open right now, www.metastock.com/sales chat, or call us, international number +1 801 506 09